Ben ritrovati martedì mattina su Florida New York Stock Exchange, in questo momento indici vicini alla parità, grande attesa naturalmente per quelli che sono i dati che arriveranno in settimana qui negli Stati Uniti, ma per oggi l'attenzione è tutta rivolta verso l'Europa. Ne parliamo con il mio ospite qui su Floor, come ogni martedì, è Mark Otto, Designated Market Maker per Night Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, I was just saying that, of course, we are waiting. We're expecting a lot of numbers this week, especially Friday. But today, the attention is focused again on Europe. You know, all these rumors about Spain that is about to ask for help, that is driving the market in Europe higher. And it was driving the market here. But now we are seeing a little bit of confusion.
Yeah, we're seeing several reports. On my commute coming in, I've actually read probably half a dozen of them that are contradicting each other this morning. So it seems as though there was speculation if Spain was going to ask and when. It seems as though it's more like when they're going to ask versus if they're going to ask. It seems as though Spain is saying or indicating that it's not going to be this week. That would sort of lead many to believe that it might be at the ECB meeting on the 18th or 19th. So that's probably the next date that we'll all be looking at. So the conflicting reports are that, you know, how much they're going to need. Moody's is saying that it's going to be more as a result of the stress test, more than actually what came out. And then you also have the Germans who are saying, you know, they're always giving a little bit of rhetoric and input on anything that goes on with borrowing.
So Europe basically is already, you know, is driving again the market. We had a great third quarter for U.S. stock market, and the fourth quarter yesterday started, you know, on a kind of a good note until Ben Bernanke spoke. What did he say that really upset the market?
Well, I think he was just defending QE3, which many people, you know, speculated that he would. It seems as though, you know, justifying the needs is a big deal because a lot of people are speculating that, you know, we are on QE3, QE1 and 2 didn't work. What makes you think that QE3 is actually going to work? He's, you know, harped on the fact that it's a much needed tool to hopefully help the unemployment situation here in the United States, and it could also help people with who are saving as well, and it actually could help to prop up the U.S. dollar.
So now, the QE3 definitely drove the market on the third quarter and helped, you know, the third quarter to finish with a very strong gain. What is going to happen now? This is the first week of the fourth quarter. A lot is going on. On Friday, we're going to see the job market report. We had a kind of a rally. We tried to extend the rally yesterday. Where do you think we can go this week?
Well, there are several announcements that will be made this week that could have a high impact on the market. So tomorrow you're going to have the ADP employment change. So we're looking for 140,000 forecast down from 201,000. From there, we're going to go on Thursday to the initial jobless claims. So we're looking for 370,000. I believe the window is like 365 to 384. So if that number actually got closer to 400,000, that probably would be bearish, and definitely if it crested above it. The other thing is on Thursday night, we're going to see the release of the Fed minutes. And then Friday, just after that, we're going to, you know, the non-farm payrolls is probably the big number of the week. So we're looking for 110,000, and that's actually up from 96,000. The other thing is the unemployment rate. So we're also looking for 8.2 from 8.1%. The 8.1%, you know, a lot of people were saying last time that a lot of people have left the job market. So, you know, that number posting actually wasn't as positive an impact as you would think.
So you think that we can see like the S&P 500 try to just lose the level that we are around now by the end of the week?
Yeah, we'll see. I mean, right here we're sitting right at a level. 1450 is a level, then 1456, then 1462. Down from here, it's 1440, 1437, 1432. So we'll see if we break that channel. You know, if the situation turns more bearish, obviously the psychological number is 1400.
And there is a little bit of a debate right now, you know, about the S&P 500 reaching 1500 by the end of the year. I know it is a little bit too early to predict. A lot of catalysts, you know, until the end of the year. One, of course, is the election, the fiscal cliff. It's above us. So what do you think? We can reach the level?
Obviously, it's a strong possibility. It seems as though the market moves a lot on speculation, so we've seen that up to this point. So I think more with the election is how the candidates are having their first debate is going to be tonight, and that's going to be what's going on here in the United States. So a lot of people are speculating that they might be talking about how they would plan to handle the fiscal cliff. So this might be a point where the election may have some sway in what happens in the market, simply because each candidate's going to say, "Oh, I would handle it this way," or "I'd handle it this way." So I think how they plan on handling the fiscal cliff is definitely going to dictate the pace. And then on top of that, you're also going to see we're going to kick off earnings. So now what you have to worry about is that the last time around, a lot of people are saying that they jumped over low hurdles, that they beat down the analysts, so the analysts lowered the hurdles, they cleared them, and then going forward, their forward-looking forecasts were not looking so good. So here we are. It's the next round. Alcoa is going to kick it off in the middle of the month, and we're going to have to see if the speculation and the QE3 factor is going to hold up to the earnings expectations. So that could be a problem in itself. A lot of S&P earnings forecasts early on are not looking so good. So that's obviously going to come into play as well.
Even though because the expectation do not look good, these are numbers easy to beat, right?
We'll see. I mean, it could always happen again. I mean, we may get the same result. We get revised forecasts. We get lower hurdles again. So
Now, lastly, we have been talking about volumes, and non-existent volumes here at the New York Stock Exchange, and in general for the stock market. And today there is an interesting event that we are all following. It's a roundtable from the SEC about the high frequency trading. According to a lot of people, maybe it's coming a little bit too late, but it could be a good starting point. What do you think could be implemented to at least see less effect on, for regular investors, for regular traders about, the high frequency trading?
well, there's a lot of proposals about what could be done about high frequency trading. I think two of the more impactful ones that I've seen is regulating speed. So if they regulate speed, that no one can be faster than the next guy, that's going to change. That's a game changer, because a lot of high frequency trading is built on the fact that you can be faster than the next guy. As far as impacting here on the NYSE, I know that one of the things that they're debating is the trade at rule. So the trade at rule is more about priority, parity, and precedence. So again, this gets back into high freak algorithms being able to jump queue out of order. So if that actually goes through, that'll also be a heavy impact on high frequency trading. And the other thing is, regulation is you keep hearing them beat the drum on regulation across the board. The market's really become more fragmented for equities. Now there are dozens and dozens of venues that you could actually trade at. So I think regulation is becoming, it's circling around to become more and more relevant. So I think that's another place where they're going to focus on. So all that could be, perhaps positive for the exchanges going forward if they do go through. Something like the trade at rule would definitely have an impact that would be positive here for the NYSE anyway.
And positive, so investors can regain confidence in the market and maybe come back.
Hopefully.
Thank you very much, Mark, for being with us.
Thank you.
E grazie a voi per l'attenzione. A domani.